Good evening, traders and investors. Will back here with another one, coming to you with a Wednesday market recap. Hopefully you guys had a very good day in the markets today. And in today's action, the S&P and the QQQs pushing to brand new all-time highs. Now, they did start off the morning a lot better than they closed. However, it was a fairly decent day of performance, especially in relation to the AI trade. However, the performance across the board today was somewhat awkward. A lot of names are pushing substantially higher. However, a good portion of the market was also left behind in terms of the action. So in terms of the news that we got this morning, guys, quite simply, it was the producer inflation numbers, one of the volatility catalysts that we had on the table for this week. If you take a look right here at what we just got, as a matter of fact, you will see that the producer inflation numbers were actually quite good. The expectation for PPI was 3.3% in terms of the consensus, which would have been an increase over what we saw last month at 3.1. As a matter of fact, it came in at 2.6, which is very good. And even the core print, which was supposed to come in at 3.5, which would have also been an uptick in relation to last month, we came in at 2.8, and month over month declines across the board. Very solid numbers, and goes to reiterate that most likely we will be having an interest rate cut next week. Now, one remaining volatility catalyst for the week, of course, is going to be the CPI, the consumer portion of inflation. The expectations are for 2.9%. Hopefully, we get a bit of a surprise to the downside, but even if it comes in at 2.9, which is the consensus, which is 0.2% higher than it did read last month, I want you guys to always focus on this website right here. Trueflation. Trueflation, 2.04%, measures 15 million different products, 30 million different data points, and tends to be a lot more comprehensive and a lot more accurate than possibly the limited basket of goods that you will find in the CPI. Now, after today's data, the rate cut odds did not really change. We still stand at about 92% for a 0.25% basis cut, rate cut, into the next week's session with Jerome Powell. And thereafter, the markets are still anticipating one more cut in the month of October and potentially one additional one in the month of December. The month of December one doesn't have the highest probability, but still skewed to the cut side at about 64% overall. So decent data across the board. However, not all sectors benefited from this news. We had very nice rallies extremely early in the morning after we got the news. However, thereafter, things kind of tapered back, especially in tech. You can see the opening candles were very strong, and then we kind of just dwindled away throughout the day as many of our big tech names just lacked some participation today. A lot of the action to the upside was concentrated into some of the names that were closely tied to Oracle's earnings yesterday. A lot of the data center plays, and especially a lot of the semiconductor plays as well, that do have some sort of exposure in terms of the cloud AI ramp. Now, in today's video, guys, we will be doing a few things together. No earnings, but we do have to go through a ton of technicals and take a look at the rotation and what exactly happened today. So part one of the video will be dedicated, as per usual, to our technical analysis rundown of our major indexes, take a look at the SPY, the QQQ, and other major sectors, and derive any possible levels of opportunity across the board for our sector rotation. Thereafter, we will do the same thing across our big tech list down here, and you will see several big tech names just not performing too well today. Apple down 3.25 after their iPhone 17 and new product releases yesterday. And even Amazon, which had nothing but good news today, was kind of brought down amongst the Oracle earnings, essentially, just because Oracle's just kind of stealing the shine for now. And we know that AWS, in terms of cloud, is the market leader. But now we might have a new challenger across the board. They got a lot of work to do to challenge Amazon, of course, but still, the short-term sentiment was felt on Amazon shares today. All across the board was fairly mixed, so we will derive some potential trade opportunities on these big tech names in the event that they do pull back. And last but not least, we will go through a brief summary of the biggest gainers and losers of the day towards the end of the video. So it should be a very fun video and probably shorter than you guys are used to. So let's jump into the action right away, shall we? So over the course of the day, the SPY up 0.29, new all-time high, and the Qs only up 0.03. Now, the Qs very early this morning, guys, were up like 0.5%. We did pull back, but we did set a new all-time high in the process. Taking a look at the heat map right here, you'll see how mixed the markets truly were today. Microsoft, Oracle, Palantir, NVIDIA, Broadcom, AMD, all of this section performing well. But what did not perform well? Well, Apple, after their new product releases, Amazon down 3.25% as well, and even Meta getting a bit hit to the downside here, almost down 2%. Some of your large consumer defensive names, such as Walmart and Costco, did have big candles to the downside as well. Take a look at software as well, guys. Software really taking a big hit again today. Software just not able to pile on those consecutive days of gains that people are really looking for. Shout out to ANET though. They're really doing well because they're an integral player in the whole data center landscape right now. Financials, a little bit mixed. The banks are looking good, especially a lot of the chart setups, but some credit card companies did pull back. Healthcare, a bit of a mixed bag today as well. And the bottom half of the market responding well to this morning's producer price inflation numbers, as yields are pretty much all across the board here today. We're not that much higher, right? As a matter of fact, the Wednesday session was a very nice day to the downside again. So of course, you have the interest rate sensitive sectors that did participate in today's action a little bit. Take a look at the one-day relative. You'll see how mixed the market was, right? A lot of sectors, big red, and the sectors that were green, big green. Big bifurcated market today. Technology, energy, utilities, materials, and industrials were your market leaders. And to the downside, sadly, communication services, defensives, healthcare, and cyclicals. On the 1 week relative, as we stand right now, very close to the all-time highs, the market's holding up very well. We only have a few volatility catalysts on the horizon, guys. Tomorrow, CPI, and then, of course, the big one next week in terms of the rate cut. So I figured I should give you guys a little bit of a preview for what I'm expecting for the rate cut scenario, right? It's going to be the following. Now, we obviously know that the probabilities do favor a 0.25% basis cut, right? Now, that being said, right, I know a lot of people are of the mindset that it may just be a buy the rumor, sell the news type of event. And I would only partially agree, and let me explain why. I think that a big portion of the moves next week will come from the Federal Reserve's tone when Jerome Powell delivers the rate cut, and also from the summary of economic projections. What does the Fed anticipate for forward GDP metrics, forward unemployment metrics as well, and the pace of the rate cuts? But it will all be in the delivery. As you guys know, I talk about it often on the channel. I mean, not every day, but whenever we are faced with a situation like this, there are two types of rate cuts. One rate cut is an accommodative rate cut, where the Fed basically comes out and says, you know what, the economy is decent, the jobs market, sure, it's a bit weak, but it is quite decent as well. We don't see any big short-term risks to the market right now. And as a result, we're just kind of cutting interest rates to accommodate the market, to make monetary policy a little bit less restrictive. That's what you call an accommodative rate cut. Usually the markets respond well to those. The other type of rate cut is the one the market does not respond well to at all, and that is a reactive rate cut. That is one in which the Fed comes out and says, listen, there's a lot of damage in the markets right now, in the economy. The economy is kind of falling off a cliff. The unemployment is also skyrocketing right now. As a result, the Federal Reserve has to cut interest rates in a rapid fashion to react to the current damage at hand. If we get a sense that it's a reactionary cut in terms of the language that Jerome Powell presents to us next week, the markets are not going to like that at all. If you ask me my opinion, I do think it will be interpreted as an accommodative rate cut, as we heard from Jerome Powell during Jackson Hole, and he did reiterate the fact that the economy was still on strong footing, although we are currently in a restrictive monetary policy environment. So it'll all be on the tone of the delivery and also on the summary of economic projections, not so much on the actual rate cut itself. So please keep that in mind. So in terms of the technical analysis for this video, guys, we're going to just jump right into it because we don't really have any earnings to cover or any other major previews as well. We just already recapped those right now. So in terms of the technicals, guys, very simple, right? We're just going to kind of fly through these because not much has changed. Beautiful daily uptrend by the SPY bulls right now, brand new all-time high, and we know if tomorrow's volatility catalysts prove to be a -1 for the markets and we have a bit of decline, who is in control right here? Clearly your bulls, right? Line in the sand stays put at 635, which is your daily higher low. You would just be shopping for a new higher low for possible further continuation. If you come down hard into this area into next week and the rate cut, 640 to 633 is your cannot lose area, because if you lose that, you lose the daily uptrend. You would also forfeit a lot of this weekly price action as well. And your weekly higher lows currently stand additionally at those lows too. So in the event you test and lose those, you'd be losing a couple time frames, the daily and the weekly, and you would just be heading into the infamous monthly consolidation that we've been looking out for the past few weeks, I would say. Couple that with the fact that the month of September is somewhat very choppy, to say the least, right? Early September proves to be somewhat good for the markets before ending to the downside, and then October can be a little bit choppy as well. I'm not saying this has to happen every time. This is just the probabilities over the last 20-25 years of what can play out and the index averages, so please keep that in mind. In the event that that does happen, well, of course, you're just simply looking for monthly consolidation, and you guys know the drill. I'm still a big fan of buying the dips on our favorite companies, especially when there's a lot of rotation, right? When the markets overall are fairly healthy, but some of our favorite names are coming down into big support levels, and we still enjoy them in terms of their fundamentals, it is a decent time to buy, and I will keep you guys updated with the levels too that I'm interested in buying those stocks as well. Moving on to the QQQs right now, same analysis. We know the bulls are in full control right now of this beautiful daily uptrend, brand new all-time high. Any short-term pullbacks will just be looking for a higher low for possible further trend continuation as well. Where you get a little bit worried is if we start testing this area down here, 558, which is your daily higher lows, and your short-term support 561 down to 554. Same concept as the SPY. Those are your weekly higher lows. If you lose them, you lose two time frames, the daily and the weekly time frame, and at that point you would be heading into the infamous monthly consolidation, which would still be quite healthy for the markets as you have a beautiful area for a fallback location into the end of September, early October if the markets choose to go that way. I'm not predicting that they will. I'm just saying how I will react down there. And once again, you guys know the drill. If we do come down there, it's going to be short puts all day for me and possibly shopping for a few leaps on some companies that have either been left behind or that suffered the largest declines throughout some form of a consolidation phase like that. But in all reality right now, the bulls remain in full control. Now, in terms of financials, financials is going to be a very interesting sector to pay attention to over the next coming days, coming weeks as well. We know that we're a little bit soft right here, daily downtrend, which is completely normal. We are just looking for some weekly higher lows. The bulls do control the weekly time frames, looking still like a very decent weekly uptrend, coming back into the 12. A few names that you might be willing to pay attention to into financials might be some of the banks. JP Morgan, very strong, looking like a very nice bull flag here, possibly going for the infamous breakout. Not only this one, but a couple banks have that similar setup. Goldman Sachs kind of ran ahead of JP Morgan, breaking out of its own setup. So JP Morgan, if I was looking for a swing trade or something like that on the banks leading into rate cuts, not too bad. And you do have a clearly defined area for some stop losses down here before possibly pushing the levels. I'd be looking at an expansion towards possibly 320 if that is the case. And my other favorite name in financials I'm looking at right now is Visa. I will accumulate as many shares as they want to give me. I mean, not in a very large fashion, but just in a normal DCA dollar cost average fashion. Down here, talking about 340 down to about 330. Fantastic level. It is your monthly 12 EMA. And we know from historical perspectives, right? We know that every time Visa comes down into its 12 EMA, it is usually synonymous with a great buying opportunity, and Visa has pretty much been flat in around this area for a while now, call it the better part of the last 6 months, so I am still a fan of playing Visa all the way down here, either with short puts or possibly adding some shares too. Moving on to healthcare right now, healthcare is struggling a little bit today with other aspects of the market, and we still are just not breaking out of the most recent range highs. That being said, the line in the sand levels is 136. If you crack that to the downside, well, sadly, you will unwind this attempt at moving in higher, and you'll have a daily downtrend, and you will still be in the context of a very nice weekly bull flag, right? Beautiful engulfing move by the bulls on the weekly time frame. We're kind of sitting above all this area of range resistance highs, talking about the 136 zone, and you might just be looking for a bit of a pullback, bit more of an accumulation phase, and possibly going for the rally inevitably into the maybe 140 level as we move into this Q3 season. Moving into semiconductors right now, semiconductors really moving strong in the recent last few days. Now, AMD, NVIDIA have been coming back, but look at some of the other names, right? Micron, fantastic push as well. Some of the other names too, some of the equipment manufacturers such as LRCX performing very well too. Names like ASML have come a long way off their bottom in the last week of trading. So although AMD and NVIDIA still remain a bit muted, you got a lot of them that are really breaking out to new high levels in relation to the most recent few weeks of trading. Shout out to TSM as well, hitting another new all-time high today. So the semiconductor landscape looks looks pretty good. And of course, Oracle earnings did help move that along. Daily uptrend is now back in control of the bulls. Any move lower looking for a new daily higher low. We've got a lot of space here. Anything above 281 should be looking for that. The weekly chart is also looking for expansion after consolidating for about 2 months worth of time, coming casually into the 12 EMA and casually into our most recent prior all-time highs. Well, they're not really recent anymore. They were July of 2024, but you guys get the point, right? Semiconductors, not looking too bad at all. Just depends where you're looking. Moving on to the Russell right now. The Russell also not doing too bad today. Just a day of consolidation. We know who is in control right now. It is still clearly your bulls looking for a daily higher low for possible further trend continuation. Pay attention if you come back too low and clip into here again, 231. You'll be losing short-term daily momentum, but the clearest time frame, in my opinion, guys, remains the weekly chart, right? Beautiful weekly uptrend in the event that you pull back into the rate cut session next week. Pay attention to this area, 231 to 225. It is your next big area of support, and it is a very large one too, guys. Prior resistance from 2021, resistance a lot all the way back here in the fall of 2024, and then you would just be looking for the essential breakout, retest of the level, and possibly run. That might be an area where I would be shopping for some possible positional longs, looking to play this theme of these small cap companies into 2026 and 2027, as we know that they've been lagging the market a lot in the past 3-4 years of trade. That is everything for your sector breakdown. In terms of the VIX right now, well, the VIX not really moving too much, but still up 2% on the day. I'll give it to them. Now, in the event that the VIX has a nice pop tomorrow from CPI, well, we'll be looking to sell puts under the market currently. Just keep in mind though, guys, selling any puts into next week for rate cuts is probably going to be a very volatile proposition. So just make sure you're targeting high quality companies. If you see the VIX expansion, try to get as low as possible on your strikes and do not get too greedy, especially into next week. Next week is a very big one, guys, right? It's the policy pivot from the Fed. It's the summary of economic projections, and it could set the tone for the following 2, 3, 4 weeks after that. So really focus on high quality companies and do not get too greedy on your strikes. If you do see some VIX expansion, I know the market makers will load a ton of premium on the options chains, but really stick to your rules and do not play this too aggressively. Just some humble words of non-financial advice. Moving on to the 10-year yields right now. 10-year yields breaking down in a very nice fashion. We've been paying attention to the break of 4.2 for a while now, and this was kind of the area, the line in the sand, and if we come under it, it's going to be tough for the bulls to really get this back, especially when we're pricing in 3 rate cuts by the end of the year. So very nice move down on the 10-year, very nice move down on the 20. We were paying attention to 4.75. We have since smashed that, now a weekly downtrend, and the higher time frames as well. Exactly what we're going for here, guys. We're going for the infamous monthly rollover. The rates have been very high for very long, arguably the past 4 years at this point, right? And now it might just be time to bring down the longer end of the curve, because the short end of the curve has already been kind of running ahead of us right now, which means that TLT might just be in its last phase of accumulation down here before starting to gain some levels. The next area to watch is going to be 90 all the way up to 93. It was resistance for a while, as you can see right there, but the bigger one that the bulls are going to be looking to go for over the next maybe 6 to 9 months will be all the way back up to the $100 mark, which consequently for any call options purchased down here, those would be kind of my take profit level in around the $100 range, which is exactly where we were last year at this same time period when Jerome Powell cut rates the first and only time since they've been this high. So that's everything for your market rundown. We can run into gold right now as well. Gold, very, very solid move, but the bulls seems as though they're getting a little bit tired here at the highs. No problem at all. If we do pull back, there is actually tons and tons of space. You're going to be targeting probably your 12 EMA, which is the closest short-term level of, support, 35.55 right there. And in the event that you set up the daily downtrend rollover, just understand what we're going for here. You're just going for a weekly higher low, right? Gold moves in different legs. You might remember this consolidation phase, big breakout. We got some short-term consolidation, did not even backtest the 12 EMA before going on for leg number 2. So if we do pull back, guys, maybe this guy right here, 3,500, the whole 3,500 to 3,400 pocket, if you come back down there, could be an interesting area to explore some shorter-term swing trade longs in the event that you want to. do. But any positions that were acquired back here, as I was saying yesterday, decent little take profit zone up here to kind of just scale out of the position progressively as we move higher, because we are overbought on a few different criteria. But very nice move by gold, to say the least. Moving on to Bitcoin right now, excuse me. Bitcoin, very decent day for them today, up 2.18%. Nice daily uptrend set forth by the bulls, now finally cracking above this 1 week's worth of price action, 112, 113. Finally cracking above it right now. Daily uptrend back on the table for the bulls, which means your weekly lows are indeed set, but now they have to regain the higher time frame, the weekly, right? It's a downtrend. Eventually you will need to reset the higher highs and higher lows, get back into an uptrend, but you guys know the drill, right? I've been a big fan of accumulating some Bitcoin positions into these support lows, talking about 107 down to 101, and also selling some puts down here too. And I will be a big fan over the next week of trading if we unwind this entire move and the bears just go for leg number 3 of weekly consolidation. Well, I'll be a big fan of doing the exact same thing that I have been doing for the past month, selling puts under here and also targeting some buys for this support area, because the highest time frame of them all shows me that we've just been in a bit of monthly consolidation right now, and any further pullbacks into that support range and the lining up of the 12 EMA could be a nice area of confluence for us to target. Moving on to Ethereum right now. Ethereum trying its best, right, to kind of break above this tight range of accumulation. What an awkward area for a range of accumulation, right? If we go back, there's really nothing here. We're far off still the 4,000 to 3,700 level, and we're also kind of far off the highs, kind of at the midpoint between the two. Very awkward area of consolidation. Tough to gauge which way this one will break. It will probably break with macro data more so than anything else. In the event you break to the downside, I will just reiterate what we're looking for here. You're just looking for a very casual pullback on ETH, targeting the 4,000 to 3,700. It would look very good, in my opinion, for some pullbacks. As a result, if you guys are trying to sell some options on SBET, on BMNR, on ETHE, ETHA, whatever you guys are using in terms of trying to sell some options down here, I still think that's the best way to go, and possibly just DCAing if ever you're buying shares slowly but surely back into the support range, which would be the most logical area for a backtest in the event that we have any more weakness. So that's it for your overall market rundown. Hopefully you enjoyed. Now we're going to take a look at some of our big tech names. All right, so taking a look at Apple. Apple unfortunately down 3.25% after their product release was not well received by the markets, unfortunately, right? So that being said, Apple losing the line in the sand, losing the daily higher lows. It was a very nice daily uptrend, and now the bears really capitalizing from that negativity in the markets temporarily. Now, the timeframes that make the most amount of sense for me are the weeklies. Pay attention to this one right here. We are going to test some of the weekly levels right now. 224 to the downside is the area that you cannot lose if you want to protect this very nice weekly uptrend. That being said, this area has been challenging as resistance, right? We peaked our heads above it, couldn't stay above it for too long, and now we're already back to the lower end of it. This was 226 up to 237. In the event that you break it and come lower, the logical area you're coming back down into, guys, is 220 down to 210, and this will be an area that I will be targeting for possible swing trade longs, but also selling some puts under the market. Fantastic area of prior resistance, fantastic area of prior support as well. It's a very big level for Apple. Also, coincidentally, it is the 12 EMA. So in the event that the bulls have to take a little bit of a breather after this nice 4 or 5 month rally, you're looking for a higher low into that location for possible further upside as the market moves higher based off of the earnings that will be had into Q3. And I think the earnings for Apple for Q3 should be pretty good. They were pretty good from Q2 as well. And I would assume that just gauging from retail sentiment, I know people are very polarized on the Apple release yesterday, but I was looking through it for about half an hour, looking through different message boards, looking through different YouTube channels and the comment sections surrounding the new product releases. And although you still have some people saying there's a lack of innovation and that they won't be upgrading, just in an objective fashion, if I looked at everything, the overall sense that I got is that people were quite pleased with this release. Maybe you are not, but I'm just talking about the general population did receive this one quite well. So take from that what you will. Moving on to AMD right now, AMD up 2.39%. However, pulling back from the earlier gains, AMD was actually up over 4% at one point today. Sadly, retracing a little bit, which is fine. We know what bulls are trying to do right now. It is a daily downtrend. We're trying to put in a nice bounce and go for the daily uptrend shift and put an end to the weekly consolidation. The bulls are trying to retest this resistance 170 to 157, and we will see if that's going to be fruitful for them, or do they have to continue consolidation a bit lower to the area that I've been selling puts into, which is 150 all the way down to roughly 132, right? This whole like 10% range right there could be the most logical area in the event that you pull back a little bit more on AMD. Wouldn't look so awkward at all. And if anything, it would just be very healthy monthly consolidation, something we have been doing for the last month and a half. So I am still a big fan of adding some AMD down there if you come down there. And I am also a very big fan of selling some put options down here on the stock as in around the 150 range. The valuation of the company is still quite manageable considering their massive growth prospects that they have on the horizon for the next 2 years. Moving on to Amazon right now. So Amazon down 3.32%. And you know what's funny about Amazon today? I could not find one piece of negative news. Not one. In terms of Amazon, other than the fact that, maybe as a consequence of Oracle's earnings being so large and their cloud ramp being so large that people are questioning if AWS is going to stay the leader, even though they're a leader by such a wide margin. It'll take other companies years to catch up. That's probably the only negative sentiment that you had on the stock today. However, if we take a look here at the positive earnings releases from Amazon, look to the bottom right there. Amazon developing AR glasses to rival Meta. So they did that today. Additionally, they also launched free Zoox robotaxis across Las Vegas, which is also very interesting. Additionally, today, they also launched free CrowdStrike service. Well, not free, but free trials and then possibly integration with Amazon Business Prime, which is very good, right? Transforming cybersecurity for small businesses. CrowdStrike went up on that. And additionally, too, we had this one right here, Amazon and Netflix joining hands to expand the advertising reach. It's a very big contract for Amazon. Netflix used to be Trade Desk's partner about 2 years ago before they dropped them and started trying to do it on their own. And now they're resorting to Amazon's advertising services. So 4 pieces of good news for Amazon today. Sadly, it was not enough, but I'm very happy as an Amazon shareholder to see Amazon broaden its horizons in advertising, possibly challenging the Meta Ray-Bans, right, with their own version of glasses, which should be interesting. Finally starting to get their Zoox robotaxis rolling. Robotaxis, robovans, not too sure what you want to call them, but they're quite cool in my humble opinion. And also, expanding their partnerships in the cybersecurity landscape. Very solid, but all that being said, the stock was still down 3.3% on the day, and the daily bulls still retain control in terms of this chart. Looking for a new higher low at this point, anything above 221, looking for that higher low, and we're coming back into support. 227 down to about 218 is the level to watch here on Amazon. Not too bad. The weekly bulls are also still in control. In the event that you pull back a little bit more, though, I'll just remind you, we've kind of been in awkward monthly consolidation here, and my favorite area to play Amazon is in the event that I can fire off some short puts under 220. That'll be the area that I'll be looking to play the wheel on, but also an area that I will be looking to possibly add some more long-term shares, as I really like the growth prospects of Amazon into the next few years. Moving on to Google now. Google down about 0.16%. Maybe the bulls are getting a little bit tired. I don't know. But the bulls have been on an absolute tear, cracking 240 today. Very solid. But we know as well that the daily RSI is quite significantly overbought. There's been a very nice rally from Google. It will not last forever. If it does continue a bit longer, though, your next upside target is 250. To the downside, possibly the first level of interest would be down here about 225. We know it's a blue sky breakout right now. There's no levels that are very close, so you'll have to go with the moving averages. We'll take this one day at a time, but daily RSI is overbought. The weekly RSI is overbought. So no swing trades on Google for me up here. If we come down a bit lower down here to the lower 200s, I'll be a big fan of selling some put options again, but that will need some pretty heavy and elongated consolidation in my opinion. So no swing trades on the near-term horizon horizon for Google. Would I be adding to some shares up here? Well, maybe if we pull back down to like 230 or something like that, it wouldn't be that bad. Around 225, the forward multiples are still quite attractive. At a low 20s forward multiple, a 1.56 peg, almost a 2.5, 2.6% free cash flow yield right now. It's not terrible, guys, all things considered, right? So moving on to Meta right now, Meta down about 1.79% because of the Amazon, Amazon AR glasses news, of course. That was the one thing that hit Meta today. Now, daily downtrend, the bulls have a nice engulfing move, and you're looking for a new higher low. They really need to stay above here, 720. Give me a new higher low and try and change the uptrend. That is what really is going to set Meta apart from other companies that are still consolidating, because Meta has a weekly uptrend to protect as well. It's been a very nice weekly uptrend. The weekly higher lows are now set at about 721, so you need to see the daily bulls capitalize on this engulfing move and push a little bit higher. Now, swing trades for Meta, I do have one small swing trade set on Meta. My stop loss is below the weekly candle right there, and I'm going for expansion towards the all-time highs. If that doesn't happen, that is perfectly fine. I can also add some Meta shares down here in around the lower 700 range. It is still an attractive proposition. In the event that we unwind everything and go test those support lows, I would be adding some Meta shares in around 760 right now. It's not a bad proposition. I'm a bigger fan of being closer to 700, but still, we are currently trading under a 29 forward price to earnings for 2025. If you go to 2026, it's actually mid-20s, which is not too bad at all. Moving on to Microsoft right now. So Microsoft up about 0.39%, but we know the context of this one is still kind of trapped in this daily downtrend, which is not the worst thing. It's just very normal consolidation, unfortunately. That being said, we are still under most of your daily short-term moving averages. And eventually, what you're going to need to see from the bulls here is a daily uptrend shift. They tried to get it done here, couldn't get it done. So let them show you where the bottom is rather than guessing. We're currently still trading around our 12 EMA on the weekly and still in the context of nice weekly consolidation, which at the same time, especially since you got a weekly crossing of the MACD right there, that's not too pretty. At the same time, though, very simple, guys. It's just monthly consolidation, right? So when in doubt, always look at the highest time frames. I would be a big fan of playing Microsoft down here, area of confluence, 470, 460, 12 EMA on the monthly, and also retesting the prior all-time highs from 2024. That wouldn't be too awkward. If you ask me if I'm adding Microsoft here at 500, no, I added it all of last year in the low 400s at much better valuations. Right now, the valuation is a little bit too steep for me to justify buying shares up here, but still, I'm holding every single one I have. I would not be selling Microsoft, to say the least. Now, moving in further, if you take a look at Netflix, Netflix was down 1.23% in spite of that advertising partnership with Amazon. That being said, Netflix bulls are not looking too bad. They played some fantastic defense, as we were saying, 1210 down to 1180, and now we're just looking for the continuation of the upside break. However, if you lose your short-term level right here, 1234, you're kind of losing the daily uptrend. I wouldn't be so focused on the daily timeframes, guys. You really got to focus on the weekly timeframes, right? This was a very nice weekly move. Weekly uptrend, they lost it, and now we're trying to get it back. So in the event that you backtest down here, I'm not opposed to nibbling on some Netflix shares in the lower 1200s. Very tough to play this one for a swing trade, however, especially with call options because they are very expensive. In around 1200 is not a very bad area to nibble. I would be kind of nibbling from 12 down to slightly under 1100 if the markets choose to consolidate September and October. It might just be one of the last opportunities to kind of nibble on on Netflix, excuse me, as we move through consolidation through the levels. Right now, the valuation is a little bit high, I will admit, in terms of the short term, but the long-term prospects for the company still remain quite clear, so I am holding all of my Netflix shares. Moving on to NVIDIA right now, very strong day on NVIDIA, 4%, and this is the day that NVIDIA was really looking for, right? It was a daily downtrend, and now we've got a very nice retracement size right now, guys. You put the fibs on this one right here, very strong retracement size, almost a 78% retracement, which sets up the bulls with a lot of space to possibly reset the daily uptrend. If we fade from this candle and pull back, this could be a nice swing trade opportunity attempt. Nice bounce size, you're looking for a higher low. You'll give the bulls the benefit of the doubt because of the bounce size. In the event we retest down here, 171 and a 165, we can take a tentative entry for a swing trade. Stop will go below this low here. That's your invalidation level. And then your take profit is 185 to push essentially to those highs. Decent 2-to-1 risk to reward trade. If you pull back a little bit more, you might also see me sell some put options into the mid 150 range, something that I have been doing a lot. When NVIDIA was down here, we were getting some fantastic premiums all the way down there. So keep that in mind. I won't erase all the drawings, but it's going to be a bit messy. Essentially, NVIDIA was just looking for very healthy weekly consolidation. For right now, they have found it, but if the rate cuts and everything like that prove to be very negative for the markets or something like that, and we do unwind here, I'll remind you what you're looking for. You're just looking for very healthy monthly consolidation, which will bring you back into that mid 155 range. I don't mind either way. I will be ready either way. The valuation up here at about 175 is not terrible for NVIDIA, all things considered. Moving on to Tesla now. Tesla up 0.24%, still trying, but getting rejected, right? Resistance range, 360 to 340 is the resistance range. The bulls are in short-term control of this very nice but choppy daily uptrend, so you are looking for a higher low. I've been very clear on where I want to trade Tesla. You're either going to have to give me a retest of support lows, because we haven't broken through this resistance yet. You either have to give me a fast flush down here to place some short puts down there or accumulate some longs closer to support, or you got to give me the breakout. Give me the breakout towards 380 and then give me the back test, and then I can possibly play the infamous breakout retest trade on Tesla as well. As of right now, no short-term trades for me. It'll be curious to see, can the bulls really break through this resistance area in the next few days, or will they continuously get rejected, similar to what's been happening essentially since the month of May? But the chart is not looking too bad. You just need that last little push to get you above and get you on to the next leg of rally higher. Moving on to Palantir right now. Palantir, another 2.7% day, building on their 4% day yesterday, finally breaking out of the range of consolidation. It was a very wide and volatile range, but now you finally got it, right? Beautiful daily uptrend sweep by the bulls back above your short-term EMAs as well, which is always fun to see. And thereafter, guys, any move lower right now, you'll be looking for a higher low and back testing the same range that we just broke out of. Anything above 148 is your line in the sand, looking for a new higher low and go for the continuation of the daily uptrend. Look at your daily MACD. MACD is always a lagging indicator, but it's nice to see when you have a MACD cross and a daily uptrend set out of a breakout zone. That is confluence, and that does give you indication that the bulls do want to go for it right now. The bulls never lost the weekly uptrend. We were always looking for consolidation. Fun to see that they came right down into the 12 EMA, respected it for the most part, and now trying their hand at a next leg higher. So the bulls looking quite good there for the breakout. Congratulations once again to all Palantir shareholders. It's been a heck of a ride for us so far. Hopefully they're able to continue that into the next few years. I think so, but it's always been a question of the valuation up here, right? Tough to get behind unless you have a long-term thesis like 5-10 years. Moving on to SOFI right now. SOFI down 1.73% after hitting a new 52-week high, 2685. Was the high of SOFI on the day, sadly closing back down into the 25 region. Now this one is a little bit choppy, right? We had a nice breakout, then they lost the daily uptrend. We're going for another reset of the daily uptrend. So if this time frame is confusing for you guys, the weekly probably makes the most amount of sense, right? It's a beautiful weekly uptrend overall. You got the nice breakout and you got one back test. In the event that we cannot make new highs and back test this area again, it'll literally just be looking for weekly higher lows, right? Beautiful leg of expansion, looking for some higher lows. I'm a big fan of playing some short puts in this location. Call it 23.5 down to 23, and that is the area for the reloads on the swing trade longs. However, just be patient with it, right? Save your buying power, because if SOFI ever embarks on monthly consolidation, I'm not saying if it is going to happen for sure, but if it does, you want to have some buying power for level number 1, level number 2, which is going to be 20, and then shortly under that, which is 18. I know people don't want to think that's possible, but anything is possible in the markets. You may as well be prepared for it. Am I selling any SOFI shares here? No, those are just areas that I would be targeting for some swing trades or building further long positions in the event that weekly consolidation turns into monthly consolidation, like you're seeing on Microsoft or like you saw on Netflix or things of that nature, right? It can happen to all stocks, even SOFI. However, the valuation of SOFI is still quite manageable at 25, trading at a 1.6 peg and a 9 price to sales. A couple more here. Uber up, down, me, 1.3%. Very choppy price action by Uber, but not looking bad. We are still protecting our range right here, 93 to about 90, which is going to be a range of support. Now, the daily time frame, I will admit, is very choppy, and now even the weekly is becoming a bit choppy, right? These are very clear legs, but you see the legs are getting a bit smaller. The bulls are getting a little bit tired up here. So we'll see what happens for Uber. One thing's for sure, though, if you want to know where I'm playing this one on larger consolidation. Monthly time frame has the most amount of clarity for me. In the event that we pull back below short-term support, talking about maybe like the high 80s, you will find me selling some put options into the low 80s. That'll be the area that I would want to play the wheel, right? I know a lot of people are trying to sell some puts here. Not a bad proposition, provided that you do have the money to DCA if you break down and test the lower 80s. Uber, not looking too bad, but the short-term price action is just a little bit too choppy for me for some swing trades right now. I mean, I guess I assume if you want to go for the possible breakout effect, well, we can put a stop loss down below there, and then your take profit will be essentially $100 or the break of 100. Not too bad if you pull back a little bit more to get those swing trades, but still, right? It's not the cleanest price action in my opinion. However, the valuation is very clear though. At $89, right, roughly around these lows, you're looking at a forward price to earnings of 30, a peg of 1.17, very attractive, and a trailing free cash flow yield of about 4.2%. Also very attractive metrics by Uber. I think they have a very bright future ahead of them still, and I am still holding all of my Uber shares as well. Moving lastly onto TSM, look at this breakout on TSM, man. TSM, what a solid push. From those lows to today's highs, 17% in like 6 days. This started with Broadcom earnings, and Oracle earnings kind of sent it further on its journey, so looking very strong there. Clear daily uptrend, and you guys can see, right? It was since July. We were doing nothing. Look at the MACD down there as well. Negative momentum, very choppy, very wide range, but the weekly time frame brought the most amount of clarity, and that's what we've been talking about for the past 6-7 weeks. We were saying it's a good time to be DCAing, nibbling on TSM, right, with the paychecks, and now we finally get the rewards from those entries, essentially. Beautiful weekly uptrend push. Any move lower, of course, we'll be looking for a higher low. Anything above 225, looking for a higher low, and you have a very clean area for a pullback, right? An extremely clean area. Talking about 246. Pullback on 246, very easy for us to sell some put options below to the bottom end of the range and possibly look for some areas for some swing trade longs for the infamous breakout retest and policy run on TSM. Fantastic company and a good valuation around 230, 240. It wasn't too bad. Now pushing 260, it's not that much worse. If you add 17% to these valuations, I mean, we could do it from right here, right? It's up like what, 17% roughly? So you just add 17%, right? 23.78 times 1.17. You're trading at a 27 forward price to earnings multiple. Not that bad. And in terms of the peg, right? Just add 17% to 1.4. It's not terrible, guys. 1.63 peg. It's not what it was, but still quite manageable. So I'm not selling any TSM shares. I'm not buying any more up here necessarily. We've just concluded most of our DCAs back there, but we'll see what happens in the near-term future for this stock. That is everything I had for you guys for the whole market rundown. Hopefully you did enjoy. I don't know why I keep getting closer and closer to my screen. I should be sitting like this, but I talk super close because I want the microphone to pick it up properly. So sorry if I'm kind of like zoomed in like this on the screen. Anyways, I know some of you don't care, but for those of you that do, I'm just kind of explaining why I keep reaching in forward, trying to avoid the echo. Anyways, all that being said, let's look into some biggest gainers and losers of the day, shall we? So we're going to start it off with Synopsys. Synopsys down 36%. Is this company a buy for me? No, not after these earnings, unfortunately. When you see big moves like this and a company missing on revenue and their growth coming into question for the future, guys, it's probably best to let it play out. Another company that's done this a couple times, when you see 30%, 5-10% is fine. You can deem that to be an overreaction. When you see 30% moves down on earnings, guys, that's an entire fundamental thesis being questioned for a few key reasons, either competition or a landscape shift in the entire business, right? Synopsys, I will not be playing. I can maybe cover their earnings soon if you guys really want me to, but this is one sadly that I will not be playing until I see some more clarity, not only in terms of the price action as well, but in terms of, you know, it was a very rare miss for them. And if you look at the forward guidance and what the concerns of Wall Street is, they're not very good, guys. They're really not very good. The business landscape is shifting for them, unfortunately. They had a nice rally from the April lows, and now they just gave it all back, so I will not be touching this one. Talking about Chewy right now. Chewy came in with okay earnings, everything in line. But I guess the street wanted more. See, this is an overreaction type of thing, right? Well, it's not really an overreaction. It's like a 2 standard deviation move, which we see a lot of, but nothing in terms of the business's fundamentals are at question right here. It just wasn't the best quarter for earnings for them. That being said, support stays put at 33 down about 29. We were exploring in the Discord today, selling some put options down here in the lower 30s. Not a bad proposition. You got a lot of support down there, and I still do enjoy Chewy stock. The earnings were not really terrible. Sure, they did miss by a fraction here on EPS and beat by a fraction on revenue as well. Margins came in a little bit underwhelming, but the growth of the business is still kind of streamlined right now. It's just with the tariff environment and whatnot, it's put some pressure on their margins. But a lot of people use Chewy as a service. They gain more members. They gained over 4 million members again, which is very solid, right? A lot of those members have recurring subscriptions with the company. So not looking too bad. I'm still a fan of playing Chewy, but at a good price. And a good price for me is like the lower 30s at this point. Trade Desk, talking about Trade Desk, no, I'm not going to play Trade Desk, guys. I know you guys would love to see me play Trade Desk, but they have too much competition from Amazon. If you want me to sum it up, guys, it's very simple, right? Number one, you do not want to compete on Amazon with Amazon, or rather against Amazon, because Amazon is just going to crush your margins, right? I'll give you guys an idea. Trade Desk, for its services, charges 20%, 15 to 20% markup on the cost of advertising, the advertising budget that a company will have, or the services that Trade Desk provides. They'll usually charge a markup of 15 to 20%. Do you guys know how much Amazon charges? 1%. So, you know, you guys do the math right there, right? It'd be fine if Trade Desk was charging 17 and Amazon would be charging 14, 13, 12. No. That's how big the discrepancy is. 1 versus 20%. So I'm not the biggest fan of playing Trade Desk right here. I think they have a very hard landscape ahead of them competing against Amazon. We just saw that big deal with Netflix and Amazon today. And even at $50, the stock, guys, it's not really that cheap. You would expect it to be very cheap, right? On a PEG ratio basis, okay, and price to sales, AMD is the same price. They're not in the same industry at all, not even close. But look, a price to sales and the PEG ratio, AMD is actually cheaper than Trade Desk, and AMD's short-term future is much clearer. So that's why I say I think there are much more clear bets in the market than Trade Desk right now. As a result, I will not be playing it, even in spite of it being down so much from the all-time highs. We could talk about maybe SoundHound. I know a lot of people are possibly exploring the possibilities of SoundHound, which is not terrible, right? But we've been very clear. SoundHound for me is a buy down here like 12. If I want to go for 12 and you guys want to go shopping for $15, $20 leap call options, not a bad proposition, but I'm just not a fan of playing after these breakouts happen, right? So consolidation, big volatility. If we can find in the 12s again, maybe you might find me playing SoundHound. Not my first choice, excuse me. Figma, you guys know the drill. We covered their earnings just about a week ago at this time. I'd be a fan of playing Figma, maybe 45 to 40 bucks. That's the maximum that I'm willing to pay for it. Whether we choose to do short puts to get into those trades or whether we wait for the price to actually get down there to build some shares, that's my price. If you guys don't know why, go through my channel. You'll see an earnings presentation on Figma. I spent 15 minutes explaining why that would be a more attractive price for me, because you got to do a lot of assumptions for forward valuations, and that just gives me a better margin of safety down there at 45 to 40. Open Door, $5.86. 4% to the downside. At least that's what you would think. But look in the after hours, guys. 35% push in the after hours. The stock is currently sitting at $8. So my thesis on this one has always been the same. You can buy a little bit on the consolidation periods, right? And then during the big legs of explosion, you can then sell some of those longs. Or maybe you were with us and maybe you just bought some shares and accumulating some positions down here. Now you're looking to sell them. Just clip out progressively. Yes, this one can run more. Short squeeze, gamma squeeze, whatever you want to call it. It is definitely a squeeze right now. Next area to take profit. $10 flat, of course. Affirm coming down after the Klarna IPO. Klarna coming out today, and the IPO price was 40. It ran all the way to like 56, 57, and then pulled the same thing that a lot of our other IPOs pulled. Like Figma did this. right? Crazy open and then down. Bullish did this as well. Crazy up and then down. And then we won't talk about the other ones, but Circle went up for a longer period of time than straight down. And then even CoreWeave went straight up for a while, like a couple months, and then eventually went straight down. So unfortunately, Klarna not able to keep it up. Maybe I'll explore this one when they start offering options, maybe under the IPO price, like 40, 35 type of thing, but I have to wait for them to add options, and you guys know what I'll do on this one. I'll just be looking to sell puts way, way, way under the market, benefiting from that, the volatility from the IPO. Essentially, a firm for me would become a buy again if we can somehow revisit into the low 70s. You guys know I had some call options. You remember those, right? We opened the call options here. We literally sold them at the top. Okay, our group sold these at the top. So I'll be looking for a reload if we come down here in the 70s, and possibly even looking to explore selling some put options, because we're just looking for weekly consolidation at the end of the day. Beautiful push, but if we come back down 70s, I'll be looking to sell some puts on this stock. We covered their earnings a few weeks ago on the channel. Fantastic earnings, guys. Really, really, really strong earnings. Nothing bad to say. But the valuation at 75 is just a little bit better, right? Moving on to maybe Circle, I guess we can cover, right? Circle would just be a buy and accumulation phase for me. We covered their earnings as well. Circle is just an accumulation period, okay? I mean, it's still going to have some IPO sell pressure, of course, from insiders, some people trying to short the stock as well. But the valuation right now is very clear. We have some very nice price targets on this one for 2027. I know the price action has kind of been trash recently, very normal. Daily bears are in full control of this chart, weekly bears as well. So you're going to need to see something like what happened on CoreWeave today to reset the trend and kind of reset a little bit of bullish sentiment on this one. For now, it just remains a slow DCA accumulation trade for me. Not so much with very large call options, just with some shares. I mean, we could talk about CRM as well. And CRM has just been a disaster. Let's just call it for what it is, right? Disaster. If we make our ways back to the lows right here, 233, maybe I'll be looking to sell some put options at the lower bound of support down there, 218, but I'm not really buying shares of CRM. There's nothing wrong with the company per se, nothing much except for the AI narrative that's against it right now, and the somewhat soft revenue growth. That was kind of the one thing that we were highlighting in the earnings that we literally covered on the channel last week. Make sure you go check my CRM breakdown of the earnings last week if you really want more information on that one. And I think that's it. I mean, we could cover more, right? Like PayPal kind of fell off a cliff today. PayPal selling puts down here, low 60s, not the worst opportunity, but I'm not really buying any shares for the long term here, even though it's a very cheap valuation. PayPal is not really a top line growth company anymore. They'll be doing good EPS expansion, good free cash flow margins and whatnot. I just think they're more attractive plays in the fintech space right now, kind of like SOFI type of thing, right? So PayPal's just not sexy anymore. It can be interesting for the wheel, but that's probably the extent of what I'll be willing to play on it. You know, other names that maybe we haven't talked about recently. I know you guys want me to talk about NBIS. We spent a lot of time on NBIS yesterday. NBIS, as I said, right? Backtest, decent for some DCAs. The deal with Microsoft is almost the entire market cap of NBIS. So I do still think that this one can still run further, guys, of course. Just don't go all in at the top right here, right? If you want to embark on a DCA procedure as we consolidate from that crazy rally yesterday, not bad. The valuation definitely does support some further expansion. It's a $22 billion market cap. Now, they will have to build out a lot of the demand that Microsoft is asking for them, which does take some time. So it's not as if they'll be able to realize that revenue immediately. But the next 2-3 years for NBIS, IREN, CoreWeave are very clear in my opinion, so you got to kind of give them time to cook. So I am still a fan of buying up here, but buying a little bit lightly. And if I were holding some shares from all the way back here, there's definitely no reason to sell whatsoever. Matter of fact, I got a very nice short put order for next week. Can you believe that I got a 75 strike for 0.5% for next week? I'm not saying it's going down there, and that's not the point, right? It's just if it does go down there, I'll get to pick up 100 shares. If it doesn't, I'll just get to collect my 0.5%. Very easy, right? That being said, that's pretty much everything. I mean, we can go through this entire list, of course, right? I'm just kind of highlighting the ones that kind of jump to mind front and center. Now, of course, Oracle, we covered their earnings yesterday. We're not going to spend too much time on it. We did say that they were slightly overvalued after their earnings yesterday, which is okay. I mean, they kind of deserve it, right? But that being said, guys, we can't really play it up here. At least I'm not playing it up here. It's just not my style personally. CoreWeave, fantastic. I mean, I've been saying on the channel for so long that CoreWeave was a buy down here, but you just had to be patient and DCA slowly. Not so much with weekly call options. trying to time the breakout, but waiting for the bulls to show you the new clear daily uptrend, which is what we have. So if we do come a bit lower here, you'll be looking for a new higher low, anything above 84, looking for it. And then you also have this area, 109 down to about 100, the area that we just broke out of. I will change this box green if they can close the weekly candle here. If they can't, it stays red. But very nice daily uptrend swing and shift from the bulls right now. CoreWeave still somewhat undervalued in relation to their forward growth prospects as well into the 2028 bear and also base case scenarios, which is what I ran. Even the bear case scenario puts this one in the $200+ range, so keep that in mind. Obviously, APLD running. We talked about this one yesterday, how it was a very nice catch-up trade. I still believe the same thing. Not too late for some longs, but getting a bit late, you know. Overall, still, guys, the easiest way to play this one is the wheel on some pullbacks or out of the money lottery call options for as long as you can find on the options chain, right? IRN, same concept. We've been talking about this one for a while. Ever since their earnings, I was saying that this one was a buy and accumulate type of position. Now finally starting to break out. Your next stop right here is probably going to be 35, 40 psychological. I mean, after their earnings, they weren't too bad in terms of the valuation at 26. I mean, now it is substantially higher, right? But it is not egregiously high right now. If you do get any pullbacks, because I will assume there will be some pullbacks from the NBIS move, from the Oracle move, the CoreWeave move, the APLD, the Iris Energy. Any pullbacks, guys, is going to be the reload areas, especially if you have a 2-3 year time horizon on these, you're going for the fundamental thesis expansion, well, then you would be wanting to play every pullback. And even with some short puts, it's a decent proposition as well to do that. Broadcom, phenomenal day from Broadcom. Obviously, the Oracle earnings helped those a lot, right? Phenomenal day from Broadcom. The only thing with Broadcom is that after their earnings, they were a little bit expensive at $315. And now at $370, obviously they're a lot more expensive, probably trading around a 2.5 peg, which is not the worst. There are some companies that trade at higher multiples, right? But still, not the cheapest play in semiconductors. Super strong company. I don't really see a reason to sell any shares. It's just starting a position up here with the premise that you're going to make a whole lot of money in the near-term future. The valuation doesn't really support that, right? It's not as if you're buying it here at April lows and you can have the rapid growth and the rapid expansion of the share price right now. If you're buying up here, can you make some money? Yeah, but maybe not as much as some other companies that have lower multiples, right? Even NVIDIA, AMD, and other companies of that nature can have faster growth than Broadcom, but phenomenal move on Broadcom right now. Got to kind of call it as it is, right? We'll do a couple more because if not, I'll be here kind of forever type of thing. But if we're looking at ARM, I'm not the biggest fan of ARM, to be honest with you. Just valuation, it's not the best, not my favorite semiconductor play. And they will be getting into possible foundry services, maybe not foundry, but designing their own chips for TSM to probably produce. So that should be interesting to keep an eye on, but not my favorite company in terms of buying overall. But, this is somewhat a very massive, now that I look at it, right? Very massive inverse head and shoulders right here. So you can have some possible upside, but just not my favorite play in semis. My favorite play in semis right now, I mean, it's not late for Micron, but I was talking about Micron a lot, 100 to 110. That and AMD down here, 150 to 140. Probably my two favorite bets in semis right now in terms of ones that have been left behind a little bit. VRT, we talked about it like last week. It was a phenomenal play. VRT, same thing as ARM. It's the same inverse massive head and shoulders. Looking good here for some expansion. Not going to lie, it is looking quite good. If you get a back test right here, decent area to play some swing trades longs. Stop loss goes below there, and you would be targeting overhead expansion 150 plus, and maybe, who knows, maybe even like 160, 170. You can call it what you want. Inverse head and shoulders, full cup and handle pattern as well. Looking really good on the higher time frames, I'm not going to lie. Moving on to Reddit right now. Reddit, phenomenal move on Reddit. Nothing bad to say here, but just very tough to chase in around these price levels. Even at 188, guys, it was getting a bit rich. At 260, it is still a little bit rich. Fantastic growth, but there's really nothing for me to do up here. And the rest is kind of the similar things, right? A-Lab, phenomenal company, phenomenal growth, but we were playing it back here, guys. We were commenting that it was a buy area here and also all the way up through here, right? Not all the way up here. You will just be chasing at that point, and you can make some money when chasing sometimes, and that's fine. It's just not a very good habit to develop, right? The last time that we were talking about this one was a stop loss below the lows on these entries right here to go for the forward break. Now you have it. If you're chasing A-Lab now, I cannot help you. Best of luck. And A-Net was a phenomenal company. Is still a phenomenal company. But like back here, right? As soon as it started cracking above that 120 level, we were saying, maybe buying it at a 3 peg is not the best proposition, even though it is a super strong company. There might be better deals in the market, and that's kind of how I still feel about it right now. And that's pretty much everything, guys. Not going to lie. If not, we're going to be here forever. So I'll try to cover as many of these as possible on a daily basis, but that's it for today. So hopefully you guys enjoyed the video. If you did, consider dropping a like. Would really appreciate it for the growth of the channel. Consider subscribing if you're new. Would love to have you back. And last but not least, if you have any questions, always feel free to leave them down below in the comments section. I'm always here to help you guys out. Lastly, in the event that you guys wanted access to a trading and investing community of a bunch of people such as yourself, over 200 members, where we trade the markets every day, share information, and have a lot of fun in the process, well, you might consider joining our trading and investing community, and the link to that community is down below in the video description. What you get as part of that group, of course, is full access to my trades in real time. Number one, here's just a lot of the trades that we've made over the past few weeks. Sorry, let me scroll. The green little check marks are wins. The red little circles are losses. If you just take a little look right here, right, the past couple of months in terms of the trades, you get access to the wheel trades, the directional trades, like debit spreads, credit spreads, leap call contracts, swing trades that I'm making with shares, long-term portfolio buys and sells as well, because we do a lot of long-term portfolio building there as well. You get access to absolutely everything, guys. I'm always sharing everything with our Discord members. Our Discord members have actually been crushing it in this success channel right here. I don't want to share it without their permission to share their usernames, but people have just been crushing it with our strategies recently, and with their own trades that they take as inspiration from a lot of our strategies as well. You get access to our private morning live streams Monday through Friday, where I trade live in the morning. I stream for about 2 hours, 3 hours every day, trade live, and also answer all your questions in real time for your stocks, your options, and your long-term portfolios. It's a great time to interact with me directly, ask me questions, and I can show you, long answers with the options chain as a help, as a tool, and also with charts and everything like that. So you really get the best explanation possible. You also get access to our private video section, where I have like a dozen plus videos in there about technical analysis, fundamental analysis, different options trading strategies that I don't so much share on YouTube. Things about leaps, debit spreads, all things for beginners, intermediate people, advanced people. There's something for everybody in our educational section as well. You also have access to our chat rooms. You can ask me your questions all throughout the day. I'm very fast to answer, even when I'm traveling in a time like this. And lastly, you do get access to all of my charts. If you guys just wanted to copy paste my charts, support resistance levels that I update pretty much on a weekly basis on like hundreds of different companies, and all the earnings breakdowns that I put on my charts as well, you could just copy paste all my watch lists and all my charts. They'll look exactly the same. It takes literally 10-15 seconds to do. It's just an added benefit for our Discord members. If you enjoy any of that, and if you want to join, the link to the Discord is down below in the video description. We would love to have you in there as part of our trading community and investing community. And if not, I will see you right back here on the channel, guys. Pleasure as always. Take care. Once again, apologize for the later than normal uploads. I try to wake up as early as I can on vacation. There's a 12-hour time difference. I try to get these videos out as much as I can, but you guys know the Wi-Fi, the upload time, the processing time. Sometimes I get these videos done, it's like 8:30 p.m., you know what I mean? But YouTube, because I'm not home and whatnot, it takes them like an hour to upload and process the video. It's kind of a pain in the ass, so sorry for the delays in uploading, but that's it for me. Take care. See you guys tomorrow. Have a good CPI day. Hopefully you guys crush your trades. Peace.